Hi there, I'm Matt Woodward and I'm the Operations Director at Carparison Leasing. Car leasing prices over the last year, and to be fair, over the last 2.5 years, have been incredibly volatile to say the least. Coming into pre-COVID, we had quite consistent pricing across the board with very little electric vehicles in the market. Shortage of vehicles and components meant that production for vehicles off the back of the pandemic, production decreased. And as such, demand stayed high and prices just generally went up across the board. What we've seen in 2023, with a bit of strain on the cost of living, less retail demand, and stock starting to increase, we have started to see, and not totally across the board, but with many manufacturers, that prices have started to come down to those pre-COVID levels, which for our particular, our online Carparison business has been great for our customers, both new and existing. There's a couple of key factors that make car leasing prices, so susceptible to change. Anyone at a funder will say, there's 100 different elements that could affect it, but I'll talk about just a couple of the key ones. Firstly, ultimately the capital cost of the car. So that is effectively the price that we end up invoicing the finance company for. In a market where there's more cars than there is supply, discounts increase, and the higher that discount is, generally speaking, the lower the monthly payment will be. The bit that also affects the relationship between the finance price is the residual value that the funder puts on that vehicle at the end of the contract. So effectively, a lot of your monthly payment is made up between calculating the difference between the selling price of the vehicle and what the funder deems the vehicle is going to be worth in 2, 3 or 4 years' time. So the higher that residual value is and the lower that the invoice price is, results in a lower monthly payment. And I suppose one of the final ones really is interest rates. Naturally, interest rates are quite high at the moment, which doesn't help the monthly payment. But what we are seeing is discounts starting to increase to negate some of that enhanced interest rate. Brokers such as ourselves, have a number of ways to influence, car leasing prices. Ultimately, being a broker by definition, similar to a mortgage broker, we use a panel of lenders. We have about 12 on our book, and our job first and foremost is once we've sourced the vehicle for the most competitive invoice price, we then find the funder with the best residual value, as I was talking about a moment ago. So our ability to use lots of different residual values and funders with different interest rates allows us to always find, the most compelling offer in the marketplace. And our buying power, as a reasonable player in the broker market, actually means that we can go to manufacturers and offer bulk volume commitments, which often mean we get a little bit more support if we can guarantee that manufacturer registration. So again, we're bringing up the residual value and trying to bring down the invoice price of the car. And it's those guaranteed registrations to the manufacturer that helps us secure some of the best deals in the marketplace. I suppose when considering if car leasing prices will go down in 2024, there are so many things to consider. I think if we tried to predict what had happened over the last 3 years, most of us probably would have got it wrong. So I'm not going to commit to saying car leasing prices will definitely go down or definitely go up. But with more supply coming back on, we've got new entrants coming to the market, new manufacturers, particularly from China, such as BYD, Aura, Amoda. Competition for market share is increasing, and that generally talks to more competitive support structures from the manufacturer. So I think from that side of things, that will help car leasing prices, find a slightly lower level. The flip side of that is more cars in the marketplace does mean more pressure on residual value, so that factor might push prices up slightly. And I suppose the final factor is we're all hoping that interest rates begin to settle down as we go into 2024. But my gut feeling is that car leasing prices in 2024 will find a more sustainable, you'll be glad to hear, lower monthly payment figure across the board, bar a couple of exceptions, but we're certainly positive about the market for 2024. I often get asked, is now a good time to place an order for my lease vehicle? And ultimately, I suppose it depends which vehicle you're looking at. At any given time, we have market leading offers on a whole range of vehicles. The best time to commit to them is now. We've got, if you go to our website, you'll see that there are a number of offers there that are outstanding value for money, and I can't commit to say that there'll be any less money in 2024 because they might actually go up. So it always depends on which vehicle you're looking at, but our expert leasing consultant team, will be able to qualify the exact vehicle that you're looking for. And perhaps there might be an alternative that you also haven't considered that is just outstanding value for money, which then might make it the right time to commit. But what we are seeing is factory orders are also competitively supported now. So if you're not in the market for a car right now, we can still order one to your specification for a nice soon 2024 delivery.